Today, we'll be backtesting to see the performance of this trading strategy on the 14th of February, which is all around known as Valentine's Day or Lover's Day. And according to me, this is the best and only trading strategy that you need to top up your trading game in 2023. If you're ready and pumped for that, then let's get right into it. In front of us right now, this is the 15-minute time frame on NASDAQ, and that is where we start doing our trading. The first thing we do when you get in front of the chart is demarcating the range within which we are going to be trading, and that is 8:30 to 11 New York Standard Time, and that is what I've demarcated here with these vertical lines. Then the next thing we do is to look for any swing high or any swing low that will be expecting price to trade above or trade below, after which we start looking for a trading setup. And most people have been asking in the comment section for me to show how I get my swing lows or how I get my swing highs. So a swing low is when we have a low and to the left of it we have a higher low, and to the right of it we have another higher low. Another example is this one. You can see this is another swing low because to the left of this swing low we have a higher low, and to the right of this swing low we have another higher low. And we can come also down here and we can see there is another swing low right here, right? You can see here to the left of this low, particularly this low, we have a higher low, and to the right of it we have another higher low. So that is a swing low. Now on the opposite side, to get a swing high, we can see this is a swing high because to the left of this high we have a lower high, and to the right of this high we have another lower high. And also coming here, this is another swing high because to the left we have a lower high, and to the right we have a lower high. So now, which are the swing lows that I'm going to be looking forward to, that I want price to trade below or trade above? The ones which are just formed before the 8:30 candle on the charts. So you can see this is the latest swing low that has been formed before price, and that is the one which we are going to be looking forward to price trading out. And all we do at this point is just to extend it in price, and we'll be waiting for price to trade below. Then now for a swing high, you can see that after this high was formed before the 8:30 candle, you can see there was no swing high if we look left in price. So we are just going to be looking forward to price trading below this swing low. And this is something you're going to meet in price sometimes. Sometimes you might find just a swing low and you might not find a swing high, and sometimes you might find just a swing high and you might not find a swing low. So let's see what price is going to do at 8:30. So you can see that at 8:30 price actually traded below our swing low. And after price doing this, the next thing we want to do is dropping down to the lower time frames to look for a trading setup. But since I trade only after 9:30, I'm just going to forward price now until when we get to 9:30, because that is when I actually start trading. And this is the candle that formed at 9:30. So with that, I'm going to drop down now to the 1 minute time frame where I start looking for my trading setup. And what is my trading setup, or what is my ideal trading setup? I want to see a very nice impulsive move that takes out a swing low or a swing high and has at least two opposite candles before that impulsive move. That is my ideal trading setup. So now let's start looking for that trading setup. Okay, this actually looks very interesting. You can see at least two bearish candles before this impulsive move, right? And another thing, we want to measure the impulsive move to see if the impulsive move is greater than 25 points. And if we measure this impulsive move right now, you can see this impulsive move is actually 34 points. That is very interesting. So with that, this is actually going to be a trading setup that we are going to look forward to taking, because this is candle 1, candle 2, and candle 3. The next thing we do is we draw our fib from the low to the high, and we place our entry right here at the 50% or the 0.5% of the fib, our stop loss at the 1, then our take profit at the negative 0.5 level of the fib. Okay, after placing our entry, you can see that price actually extended a little bit and formed another fair value gap. With that, we are going to actually adjust our trade, because sometimes you might not adjust it and price is going to come and trade at the 0.5 level of the next one, because you see there's this fair value gap, there's this lower fair value gap, and you can see the 0.5 level has actually gone higher. So we are going to adjust the entry and also the stop loss to fit these parameters. Then we are going to see if price is going to get to our trade. Okay, now after adjusting, let's see what price is going to do. Something very interesting here. You can see that this higher fair value gap, price actually came and traded within this higher fair value gap and went above this our initial high, which is the normal high where I always say this at this point I always put my trade to break even. Whenever price does this, I always love to take out myself from the trade. So I always love to cancel the trades, because most of the times when price does this without getting us into the trade, price might just reverse and come and hit our stop loss. So with that, I'm going to cancel the trade and look forward to seeing another setup. You see, our entry was somewhere around here, and if we had left our entry, price would have actually come, triggered us in, then went to our take profit. This is something that happens very rarely. It does not happen all the time. So because this has happened today, it does not mean that I should change my rules because of this successful trade that has happened today. But within my backtesting, what I've seen over the long run, this does not happen all the time. So that is something which you can actually take and go backtest for yourself and see if it actually works for you as well. We have at least 2 bearish candles before this nice impulsive move that has taken out this swing high. We have a lower fair value gap here, another fair value gap here, then another one here, actually 3 fair value gaps. And if you are to measure the impulsiveness, we can actually see that it's actually 41 points. So the next thing we do is we draw our fib from the low to the high, then we place our entry, our stop loss, then our take profit. And you can see that price actually did the same thing right here. You can see that this candle here came and entered in that fair value gap and went above this high. And just like I said for the previous one, when price takes out this high without actually triggering us into the trade, I actually always close my orders immediately. Now, this is a perfect example of what I was telling you guys about. So let me actually show it and demonstrate it to you guys. This is what we're looking at, right? And this is where our entry was. So, and as you can see, price came here, filled this fair value gap and went up. I think it did not actually hit our take profit, but when price came back and reversed, you can see that price came, if we had our entry still, it should have triggered us in and actually hit the stop loss. So you see, this is just a typical example of the times when price might just come back and hit the stop loss without actually getting to your take profit. You can see at least 2 bullish candles before this nice impulsive move, that the impulsive move actually is 40 points. But the reason why this is not going to be a trading setup for me is because you can see this is candle 3, right? This is a trading setup. Candle 1, candle 2, and candle 3. As you can see, candle 3 of this setup is actually bullish. And I want this candle 3 to be bearish to validate the trading setup. With that, this is not going to be a trading setup that I'm going to take. Okay, there we go. And on the opposite side, we can see there's some sort of a setup. This is actually a bearish candle. So we have at least 2 bearish candles before this impulsive move, which if we measure the impulsiveness, this is actually 29 points. So this actually meets all our rules because we had at least 2 bearish candles before the impulsive move, and this impulsive move has taken out this swing high right here. I've shown you guys how to look for a swing high. So this is a swing high, and also you can see that the setup has actually formed 2 fair value gaps. This is the lower fair value gap, and this right here is the higher fair value gap. With that, the next thing we always do is we draw our fib from the low to the high. Then you can see this is where the 0.5 level of the fib drops, right? So we'll place our entry, stop loss, then take profit. Now, after placing our trade, let's see what price is gonna do. Oh yeah, that was a very sweet trade. And as you can see, we got triggered in right here. 1, 2, 3, 4, 5, 6, 7, 8. And after 8 minutes, our take profit got hit. And this was a 1:2 trading setup that I actually took on this day. And I'm going to show you the screenshot right here on the screen, which I took, and it was a successful trade. This was the trading setup that formed on the 14th of February, Lovers Day. So as people were celebrating their Valentines and showing love to one another, I was also showing love to my charts as I got this very amazing and wonderful trading setup. And there's one thing that I want you guys to always remember: no trade is always better than a lost trade. If you want to see me simplifying this trading strategy in such a way that everybody can understand, then click on the video right now on the screen. And with that said, catch you guys in the next one.